My name is Ben. I'm from Funderbear, and we've already funded over 19 million Rand in 2026, which is about $1.178 million. Every month, I speak at events, I create content, and we're on a journey of building the number one education brand in SMB finance. So we're doing this on our Instagram, on our Facebook, on our YouTube, on our email list, and it's been incredible to see some of the case studies that are coming out of the content and out of our ads and out of just working with our private finance firms. We currently serve businesses in South Africa, the US, and the UK. Our mission is to help business owners leverage debt to acquire income producing assets that create jobs and valuable products and services. So we educate business owners on how to use debt, how to use capital, how to use finance, how to use credit to purchase income producing assets that create returns for them past the credit, past the debt. So how do we get rich off of other people's money? This is a concept that I first learned many years ago reading Robert Kiyosaki's Rich Dad Poor Dad when I learned about investing in gold and stock and real estate and businesses and the differences between assets and debt. And at the end of this video, I want to leave you with some implementable tactics that you can use to increase your cash flow, increase your business's valuation, increase your asset base so that you can create generational wealth for you and your family and escape debt, escape expenses, and escape the stress of not understanding how to produce wealth consistently. So let's get right into it. Let's go to my desk and let's take a look at how this all works and what you can do today in order to grow your business even more in 2026 and beyond. It's going to be great and looking forward to showing you everything that I've learned from my first $1 million in funded businesses. Now, before we can talk about how to use assets to create generational wealth, we need to first understand what is an asset. Here is a basic summary, right? An asset makes you money and a liability takes your money. So makes and takes. Now let's take a look at some examples of liabilities, right? So an example of a liability could be a tax bill, something that takes money. An example of a liability could be owing money. So this could be a regular bill, right? An example could be employees or payroll. What about assets? So before we completely get lost in liabilities, what about assets? What makes us money, right? So what makes us money is stock. So this could be stock or inventory, something that we can obviously sell to people to create a return. Another example could be investments. Investments. Another one, which I like, is your AR. Your AR is your accounts receivable. So this is money that is actually owed to your business by clients. So let's say that you finish a big manufacturing order and that manufacturing order is $100,000, then this money is owed to you. So that is an asset. That agreement is an asset. Another example could be, property. Another example could be let's think like equipment or machinery. So let's say that you have a transport business and you've got vehicles, or you've got a mining business and you've got drills and you've got machinery, right? Those are all things that produce you income. Now, what about liabilities, right? So liabilities, there is one core one here that is very much misunderstood. And that core liability that is misunderstood is debt. And debt has got a very bad name. Debt's got a very, very bad name. And the reason that debt's got a bad name is because there are more consumers on the planet than there are business owners. So there are more consumers than there are business owners. More of these guys. Okay. And the problem is that consumers use debt to purchase expenses. So they use debt to purchase shoes, clothing, to pay rent, to buy cars, to go on holidays, to buy, a MacBook or an iPhone. So they use debt to purchase expenses, which is bad. That makes you poor. What business owners do, however, is they use debt to purchase assets. They use debt to purchase stock. They use debt to buy investments. They use debt to fund purchase orders, to build up their receivables. They use debt to buy commercial property. They use debt to finance equipment and vehicles. And because of this, they use debt, which is a liability, to buy assets. So Ben, when should I use debt to buy assets? You want to use debt to buy assets when the debt is outweighed by the assets. So I'm going to give you an example in construction, retail, manufacturing, professional services, and healthcare, and then a general rule of thumb to use. So let's talk about construction, right? This is one of the biggest sources of our clients. We get a lot of clients in construction because of how cash intensive it is. So let's say that in construction, they use debt to finance a $200,000 machine, but it helps them finish a $300,000 project. Clear ROI. Let's talk about retail. Maybe you get $50,000 for stock that you then sell for $150,000 in sales. Manufacturing. Maybe you use a $400,000 line of credit to purchase a machine to help you fulfill a $600,000 order. Professional services, IT, law, accounting. You might use debt for $20,000 in hiring new people to cover a $50,000 client contract. Healthcare. You might use $100,000 in medical devices like x-ray machines or ultrasound machines to help support $250,000 in patients. The rule that I want you to aim for across funding over $1 million in businesses is you want to be aiming for at least a 30% lift in your business. The more, the better. For example, this is a 250% lift. This is a 250% lift. This is a 100, sorry, this is a 150% lift. This is a 300% lift. This is a 150% lift. So you want to be aiming for at least a 30% lift. So if I take $100 of debt, I want to be sitting with at least $130 in assets or revenue, okay? So that you can comfortably cover the interest and be left with the growth. So what offers are available to me and my business? Well, it depends if you're in South Africa or in the United States. In South Africa, we've got Honest Growth Capital, which is bridging finance. And then in the United States, we've got invoice factoring. So let's focus quickly on South Africa. We currently have partners who offer 100,000 Rand all the way up to 10 million Rand over 6 to 12 months. In specific cases, we can go all the way up to 24 months, but 6 to 12 months is the norm. And the way that it works is it follows the 1x rule, which is 100% of monthly turnover. So if your business is currently doing 500,000 Rand per month, you could qualify for 500,000 Rand in cash. But there are minimums to this. So in order to apply, your business needs to be active for around 12 months. It needs to be producing over 1 million Rand per year, and it needs a minimum credit score of 580 Rand. If you want to apply for growth capital in South Africa, there is a link which sends you to a quiz in the description of this video. So you can apply for South Africa. It will generally take 1 to 2 business days for our private firms to review your application, and then they will give you a provisional offer and let you know what you qualify for and what the repayment terms will be. But this is for if you're in South Africa. In the United States, it's B2B only, and this is specifically if you're struggling with clients who pay invoices on 30, 60, or 90-day terms. And it depends on your client's credit score, so how creditworthy your clients are. And this can be from $30,000 all the way up to $5 million. We even have partners who can do up to $25 million with rates as low as 0.5%, 1%, 2%. So this is for invoice factoring. And I will also have a quiz in the description if you are a United States business and you want to hear more about invoice factoring through our partners. So these are the offers that are available. Please do your due diligence. Make sure you meet the minimum criteria. I encourage you to apply. And then Fundabear, as your broker, will match you with the best offers available and put you in touch with some of the top rated South African private finance firms or some of the top rated United States private finance firms. We simply educate, help connect you, and help prepare you so that you can use your debt to purchase assets to grow your business past the interest rates. So if you are wanting to apply, I'll leave the links in the descriptions. But I want to thank you so much for watching this video, and I'm wishing you all the best in your business journey and for the rest of the year and onwards. Take care of yourself and goodbye for now. Stay tuned for more content and helpful educational videos that are coming out soon.